In this new video, we discuss some new screens we recently added in ChartMill based on two books by Mark Minervini, two-time US investing champion, 1997 and 2021. Trade Like a Stock Market Wizard and Think and Trade Like a Champion. Two comprehensive articles are available on the website. Part 1 gives an overview of the components that form the strategy and the specific screens we have developed for it in ChartMill, and Part 2 takes a closer look at the strategy itself. In order to test the different Minervini filters, we decided to track the obtained setups in a paper trading account that can be followed via my Twitter account. To be clear, this is by no means investment advice. The setups are purely educational and serve purely to assess the quality of the setups. This video belongs to the first article, and for the second article there is also a video available. A link can be found in the description below. So why Minervini? The strategy itself is a combination of both technical and fundamental analysis, and I myself am a great proponent of this. By doing so, you combine the intrinsic qualities of a company with specific trend and performance filters. Positions are entered as swing trades or position trades, and one of the big advantages with this strategy, assuming that risk and money management rules are applied correctly, is that drawdowns are a lot more limited than with purely fundamental investment strategies. SEPA stands for Specific Entry Point Analysis, and it is based on 5 key elements. Trend. Almost every stock that experiences a huge price explosion does so from a pre-existing rising price trend. Therefore, correctly identifying the direction in which the stock is trending is very important. Fundamentals. Almost all of these stocks are characterized by significant improvements in sales, earnings and margins. Catalyst. Every super performer owes its success to some kind of trigger, an event that had such an impact that the stock was suddenly discovered and wanted by a lot of market participants. Several things can be at the root of this. A new product that sells tremendously well, management sending out a positive earnings alert, quarterly results that are much better than what the market expected, etc. Entry points. Another feature is that for each of these stocks at least one, but usually several specific price points can be identified at which you were able to buy the stock. These price points are characterized by a very good risk to reward ratio. Exit points. Exit points are important in two ways. First, as a safeguard against loss positions that are an inherent part of any strategy. The stop loss ensures that losses remain small and do not turn into large losses that are detrimental to the available trading capital. But clear rules are also needed to secure profits in time. Every price surge eventually comes to an end, and it is important to adequately protect accumulated profits and cash out in time. The stage analysis concept assumes that each stock is in one of 4 stages, including stage 1, consolidation, stage 2, accumulation, the uptrend, stage 3, distribution, and finally stage 4, capitulation or the downtrend. An extensive analysis and application can be found in Stan Weinstein's excellent book Secrets for Profiting in Bull and Bear Markets. Mark Minervini concentrates his SEPA analysis exclusively on the stage when stocks are rising, which is stage 2. Indeed, his strategy assumes that any stock that rises extremely does so from an existing uptrend. The technical conditions are the blueprint of its strategy. Even stocks with excellent fundamentals must meet these before they can be considered for trading. The trend template contains the following parameters. Moving averages. So the current stock price is above the 50-day moving average, the 150-day and the 200-day simple moving average price line. The 200-day moving average line is trending up for at least 1 month. The 50-day moving average is above both the 150-day and the 200-day moving average. And the 150-day moving average is above the 200-day moving average. 52-week high and 52-week low rules. The current stock price is at least 30% above its 52-week low, and it is within at least 25% of its 52-week high, and the closer to a new high, the better. Finally, the relative strength ranking is no less than 70, and preferable in the 80s or 90s, which will generally be the case within the better selections. Nvidia and Microsoft are two examples that match this trend template. For both stocks, on the left side you will see the daily chart with the 50, 150 and 200-day simple moving average. On the right is the weekly chart for both stocks showing the 30 and 40-week simple moving averages. The 30-week is the equivalent of the 150-day average and the 40-week of the 200-day average. By displaying the daily and weekly charts side by side, you can quickly get a clear picture of where the price is in the upward trend, both for the long and short term. The trend template is available as a predefined trading idea in ChartMill. In this article, you can read how to save this trend template view in your own account so you can easily bring it up from the stock charts or stock screener page. A link to this article can be found below this video in the description. The trend template is only one side of the story. The strength of the strategy lies in the combination of both technical and fundamental requirements. The company must show signs of strong and accelerated growth in terms of earnings and sales, together with profit margins that evolve positively over a longer period. Obviously, adding all these intrinsic qualities in one screening filter isn't going to work. The search would probably end up with very few or even zero results. This is also addressed in his first book, which is why it is important to apply the various fundamental filters separately. That way, you will eventually be able to identify some companies that score well in several areas, but that would have been irrevocably dropped if you applied all the filters at once. We have added a comprehensive set of fundamental filter screens focusing separately on earnings growth, revenue growth and earnings surprises, and you can customize the values used. By filtering in multiple steps in this way, you will discover companies that show up in multiple filter combinations, and it is just those companies that are interesting to consider as potential trading setups. So finally, let's briefly take a look at some filters. So the basic screen 1, this filter focuses on annualized earnings per share growth, and this must be at least 15% annually for the past 3 years, and it must also have accelerated in the last full year. The basic screen 2, on a quarterly basis, earnings per share must have increased by at least 25%, and growth must also have accelerated over the last 2 quarters. Then the screen 2A is the same as the basic screen 2, but there is an earnings per share surprise, at least 2 in the last 4 quarters. The basic screens are all available in the Trading Ideas Center. The subscreens with the letter indication A, B or C can be found in this first article. If you click on one of the links in the article, the screen immediately opens in the stock screener page. In order to apply these filters quickly, save them under your own account so you can easily access them from the stock screener page. Once the screen opens, click on the folder icon above the applied filters to do this. Enter a name and press Save. That way I saved all the basic and sub-filters myself so I can recall them at any time with one click. One last tip, once you have saved the screens, you can also use them to check which stocks from a watch list do or do not meet one or more screens. To do so, go to the screener page and open one of your saved screens. Then select the General tab and open the Watch Lists menu. Here, select one of your watch lists. ChartMill will now compare the stocks from the watch lists with the filter conditions, and only the stocks that meet these conditions will be shown. For example, if I select screen 2, 2 stocks remain from my list. If I select screen 3A while selecting the same watch list again, now only 1 stock meets the conditions of this screen. So this brings us to the end of this first video. Be sure to watch part 2 as well. In it I discuss 2 specific setups that were found using these Minervini screen filters. Thanks in advance for watching, and please don't forget to like this video and subscribe to our channel. See you soon.